If you're watching us here on Chartbusters, let's take note of the primary market action now. We have a new IPO that is opening today. Piping solutions company DEE Development Engineers IPO opens for subscription today, closes on the 21st of June. They plan to raise a little around 418 crore rupees through the IPO, of which the fresh issue would be 325 crores and an offer for sale 93 crores. Bansal, who's the chairman and managing director of the company, joins us. Along with him is Sameer Agarwal, who is the chief financial officer of the company. Thanks a lot, gentlemen, for joining in, Sameer, as well as Mr. Bansal. Apart from the business, the growth, etc., the one thing that the street would like to know, and that's before they make any investment in any listed company, is the return on equity. And if we look at both your return on equity and return on capital, they've been around 3%. What is the scope for improvement here on return on net worth and return on capital employed going forward? Any of you all can answer?
Yes, Sameer will answer.
So you must notice that the company is having a legacy of 35 years. In past, the company has done fairly well and cleared the EBITDA level ranging between 20 to 22%. Since we are coming up with our new facility, which is closer to the Kandla and Mundra port, and our product line is heavy material, therefore that facility is going to bring lot of saving in terms of logistics cost. Since it is a new facility, there would be a sufficient amount of operational leverage as well. And we are actually enhancing our capacities. Therefore, the allocation of fixed costs shall get reduced over a period going forward. Therefore, we see a lot of scope in terms of increasing our margins, and going forward, we shall have a much better PAT margins, ROCE and EPS.
All right, Mr. Agarwal, good morning and thanks a lot for joining in, and welcome to the show, Mr. Bansal, as well. So then an ROC of around 10%, would it be moved to double digits? Is that the aspiration?
Yes, we are foreseeing that number, and we don't find any kind of problem, since we have actually bifurcated our product line and sector line differently, and we have allocated the product line to the respective facilities, which will bring a lot of operational efficiency.
Okay, all right. Let's focus on a couple of aspects then. Out of the total money that you're going to raise, you're going to be paying back, I think, 175 crores. Could you tell us what is the current debt in your books? What are you borrowing that debt at, the borrowing cost, and what does your debt come down to?
So, at present, at group level, we have a debt around 400 crore rupees, out of which we are repaying 175 crores out of offer proceeds, and this will bring down the debt level to 225 crore rupees. The cost of debt is around 9 to 9.5%.
Okay, all right. So you'll directly be saving around 17.5 crores approximately of interest cost.
All right. You said that you will leverage your capacity going forward because you've invested in capacity expansion. You've also invested further in capacity expansion. But what's also interesting is that your capacity utilization has been around 52% over the last 3 to 4 years, the reported period that there is. Why are you investing in capacity when you are not utilizing your current capacity already? And what is the peak revenue at peak utilization?
Let me take you a little bit down the line of the history of our company. As we told that we have a legacy of 35 to 36 years of legacy, and we have always worked in profit, and second thing is that, we never had any dearth of orders. The only constraint has been the capacity. And now you will say that why our capacity is underutilized. Here I have to say that, these are the government document when we were serving the power sector, the unit of Meyer is metric ton on which we work. While in the last 4 years, we had to switch over to oil and gas sector because of the downturn of power sector in the Indian domestic market, and where the unit of measure for oil and gas job is not metric ton, while it is called dia inch of the work which we do on a daily basis or on a monthly basis or on an annual basis. And if you see our capacity, which is an actual capacity in the last year, we have a capacity of our Parval plant at 18 lakhs dia inch per annum, while we did more than 28 lakh inch dia of welding in the last year, which means, we had already operated, we are operating the plant at more than 100% of the capacity. But since it is it's a document going on from years together, and it has been amended from time to time based upon that unit of measure only. So that's the reason. And, just to explain you further, the power sector jobs are high in weight and less in volume, while the oil and gas sector jobs are very high in volume, maybe 4 to 5 times of power sector job, while they are comparatively much lower in weight. So that is the anomaly, which you are seeing on this. So that is the reason, we had planned for the additional capacity, and that which is going to give us very good dividend in terms of dia inch capacity.
Okay, all right. Hi, Mr. Bansal. Just to go according to the capacity utilization levels and the capacity, as of the last year, I think the total capacity was around 95,000 tons. And then you added another facility of around 3,000 tons. You're also in works of adding another 9,000 tons. So by the end of this fiscal, will the capacity be something in the vicinity of around 106,000 tons?
Yes.
Yes, please.
Okay, that's correct. Got it. And since Mr. Bansal and Mr. Agarwal as well, you all were talking about the good order book that you all have, what is it right now?
So we have had an order book of around 828 crores as on 31st of December. And, as I told you just before sometimes that, we never had felt any dearth of orders during all the 35 years of...
Correct. No, Mr. Bansal, Mr. Bansal, we have that number 828. But, we have quite a few months have gone past. So we want to know how much higher is the order book today? As you mentioned repeatedly, no dearth of orders. You're well placed. Things are looking up for the power segment. So then there'll be some more focus on power from oil and gas. So could you give us an updated number? What is it?
It has swelled a lot. It has swelled a lot. I don't know whether I can give the numbers or not, but it has swelled a lot. I can only tell you that.
All right. So from a revenue perspective, what is the likely growth going forward? Because last 3 years, you have compounded at around 10% with margins of around 12.5% in the first 9 months of this fiscal. Would you continue to grow at 10% or would you grow faster than that? And what is an optimum margin band that you're eyeing?
As you see our last 3 and 9 months numbers, we have grown more than 12% on year-on-year basis, except the COVID period. And going forward, the kind of capital cycle on and the orders in hand, we foresee handsome amount of growth going forward. And since this capital cycle is fairly large, therefore we don't foresee any dearth of orders going forward for another 7 to 10 years time. So both power sector and oil and gas sector, including chemical sector, including nuclear power, every sector is growing at a very, very fast pace, and the project cycle also have squeezed a lot. Therefore, we foresee a good amount of rise in our top line as well as bottom line.
Will that be higher than the last 2 years of 12% that you're talking about?
Of course, yes.
Okay.
Okay. All right. A couple of more factors. And what is the current working capital day cycle? I'm looking at inventories. That's moved up considerably.
So, whatever numbers currently which is available in public domain in the offer document, that has little bit on a higher side. The reason is very, very clear. As Mr. Bansal has just said that we have actually overutilized our mother facility based at Palwal. So the process time to complete the manufacturing process. We didn't get, and that is why the material got stuck at our stockyard. I must tell you, we are working in a very niche sector where the raw material for us is not available as commodities are available. We are utilizing seamless pipes with different metallurgy, with different sizes, and we have to procure our material across the globe. So therefore, the procurement takes little more time, and we need to keep this raw material in stockyard for a longer time. This is the inherent nature of our business. Since we are in projects, therefore we have to follow this route. But I can tell you, since we have already increased our capacities and we have gone nearer to the port, therefore there would be a substantial amount of downfall in terms of inventory days, as well as since the project cycle of the OEMs have gone reduced, therefore there would be a good amount of reduction in payment cycle from the customers as well.
All right. So from the numbers that you've given to the shareholders in your RHP or prospective shareholders in your red herring prospectus, it seems as if this year you will end, fiscal 24, you will end with inventory, with working capital days of around 183 rather, and FY25, it will be about 166. These are numbers given by you in the red herring prospectus. Final question before we let you go is your new business, the new business that you've added. Just wanted to know what exactly is the opportunity here. You expanded your business vertical of design, engineering, fabrication. How much can this be as a proportion of your revenue going forward?
So there's a huge potential for this particular business which you are talking of. We have added a new line which we call it as pilot plants, and pilot plants is the need of the hour in our country today, as the government of India has a lot of focus on Make in India. So every chemical industry, every refinery, every research lab has been targeted that they must produce something new of their own, which can be produced in India. So for that, pilot plant is a basic equipment or a basic setup on which all these trials are done. And we are expecting huge traction on this in terms of volume. And since this is a very highly profitable business, so our PAT line, our bottom line, and PAT will also increase substantially.
Okay. All right, gentlemen, thanks a lot, Mr. Bansal as well as Mr. Agarwal, for joining in and filling us in with all of those details. We'll wish you all the best with regard to the IPO. And on listing, we re-invite you on the show, and maybe we could get some future projections as well. For the time being, we wish you all the best with regard to this issue. Well, for the time being, though, we'll slip into a short break, come back, continue to focus on markets and stock-specific action. Don't go anywhere.